A leading agrochemical company just posted its strongest ever annual earnings with EBITDA up 36%, PAT up 39%, and margin expansion fueled by new product launches and global market expansion. Meanwhile, a wastewater treatment specialist delivered record-breaking quarterly results, secured 127 crore rupees government contract, and is scaling project sizes to capture high margin opportunities. These two companies aren't just growing, they are building serious momentum for long-term leadership. Stay tuned in the video to discover who they are. Hello everyone, welcome to another edition of Noisemaker, where we keep things simple and focus on companies that often go unnoticed but have strong potential. I am Bhumika Jain, Equity Research Associate at Desvelado Advisory, and today we'll talk about two companies that have made solid progress in their business and might continue to grow if the trend continues. But before jumping onto the companies, let's see the disclaimer first. Any discussion, facts, or writing provided for international purposes only and do not constitute buy or sell recommendation. Please conduct your own due diligence before making any kind of investment decision. Now let's come to the first company, which is Enviro Infra Engineers Ltd, which is engaged in the design, construction, operation and maintenance of water and wastewater treatment plants and water supply projects for government agencies and entities. The company reported its strongest ever quarterly performance with revenue rising nearly 31% year on year to 393 crore rupees in Q4 FY25, which is up from 300 crore rupees in Q4 FY24. EBITDA increased by around 16% year on year to 99.4 crore rupees, and PAT grew by approximately 30% to 74 crore rupees. For the full year, revenue rose 46% to 1066 crore rupees from 728 crore rupees in Q4 in FY24. It also secured a 126 crore rupees of order from the water supply and sewage division number 1 Amritsar and WATCO Odisha. The company is now concentrating on executing the larger projects, scaling from 50 MLD to 400 MLD for STPs and 20 MLD to 50 MLDs for SCTPs to basically qualify for the high value contracts. This strategy is expected to support the margin expansion and drive consistent top line growth of 35 to 40% annually over the next 4 to 5 years. Looking ahead, as a part of its long-term strategy, the company is entering into the green energy space by setting up a new subsidiary focused on solar power, with plans to expand its round-the-clock renewable energy, hydropower, and green hydrogen. These initiatives are expected to strengthen both revenue and profitability over the time. The company has submitted bids worth rupees 3,000 to 4,000 crore rupees with outcomes expected within the next 120 days. It anticipates being the lowest bidder or securing around 2,000 crore rupees in order, indicating the strong future potential. Now let's come to the second company, which is Insecticides India Ltd, which manufactures agrochemicals, biologicals, and household products. The company just posted revenue of 1999 crore rupees in FY25, marking a 2% increase over the previous year, with EBITDA rising 36% to 221 crore rupees and PAT growing 39% to 142 crore rupees. EBITDA margin improved from 8.3% to 11%, while EPS increased from 34.4 rupees to 48.3 rupees. This performance was supported by 11 new product launches and acquisition of crore Research, which strengthened sourcing efficiency and helped lower cost. The company aims to achieve a premium product mix of over 65% within the next 1 to 2 years to drive the further margin improvement. Export growth is expected to gain momentum through new product registrations in Latin America and Southeast Asia. Although the B2B segment faces short-term headwinds, easing the raw material prices and favorable government policies are likely to support recovery. An investment of 125 crore rupees is planned over the next 2 years for capacity expansion at Dahej and Sotanala, with revenue contribution expected by FY27. Continued R&D efforts and upcoming biological product launches are expected to bolster the long-term growth. Now, going forward, the company is targeting gross margins of 30 to 35% and EBITDA margin of 12 to 13% over the next 1 to 2 years, driven by the shift towards premium products, upcoming launches, stable raw material cost, and favorable monsoon. It is also aiming for over 20% annual volume growth in the premium B2C segment over the next 4 to 5 years, supporting consistent and profitable expansion. For FY26, more than 6 new product launches are planned, including Milstin, which is a seaweed-based offering projected to lead its category with a sales potential of 50 to 70 crore rupees over the 5 years time frame and 10 crore rupees in FY26 alone. The company also intends to shorten its working capital cycle by 20 to 25 days to enhance the operational efficiency and cash flows. Now let's come to the previous picks. First company Dhanuka Agritech Limited from 1620 rupees to 1699 rupees, up by 4.8%. Rosari Biotech Limited from 715.6 rupees to 660 rupees, down by 7.6%. Lumax Autotech Limited from 649.8 rupees to 662 rupees, up by 1.8%. Then Interact Building Solutions Limited from 1889 rupees to 2129 rupees, which is up by 12.7%. Now Gabriel India Limited lastly from 628 rupees to 647 rupees, which is up by 2.8%. In the summary of all the recent filings, Insecticides India Ltd, the company reported revenue of 1999 crore rupees, which is up by 2% year on year. EBITDA of 221 crore rupees, which is up by 36% year on year, and PAT of 142 crore rupees, which is up by 39% year on year in FY25. Then lastly, Enviro Infra Engineers Ltd, the company has delivered its highest ever quarterly results with revenue growing by 31% year on year to 393 crore rupees from 300 crore rupees in Q4 FY24. Company also bagged an order worth rupees 126 crore rupees by the Water Supply and Sewage Division number 1, Amritsar and WATCO in Odisha. That's it for today's edition of Noisemaker. If you like the video, you can scan the QR code for the full report. And if you like the video, please comment, and we'll be back soon with more simple and clear market updates. Until then, stay curious, stay informed, and stay ahead of the market.